Saturday, so thank you for coming. So I can start with my journey if you like, and the case study I'll put in between. So I started studying maths and statistics, and during my first year there was the COVID time, and during this time all the lectures went from in person to online. At the time I was also playing water polo, and all the training and games stopped as well. So I had a ton of free time during COVID. And some of this free time I used to read books about business, and slowly I got to read a few articles on Warren Buffett. And in the beginning, I had no idea what he was doing. But the fact that he was one of the richest people on earth and he made all this money investing in stocks, it was like really interesting to me. So I went through to see what Warren Buffett really did. And what I do remember is that the simple concepts he was teaching were actually really hard for me to understand. So I know many people that understood his concepts very quickly, but actually that wasn't the case with me. Took many months, if not maybe a year. So what I did was I saw his recommended books, and the first one was The Intelligent Investor. After that was Security Analysis. After that was The Interpretation of Financial Statements by Benjamin Graham. And even though I didn't learn much from those books, because I wasn't ready to understand what was in there, I felt like with enough time, I could become good enough to make this as my career. So the more interested I became in investing, the less interested I became in learning maths and statistics at school. And during this time, I actually forgot to go to my lectures. And of course, after a few months, I had my exams and I failed most of them. And this part was quite tough. It was quite a tough period for me because I was in a period where I didn't know if I could be good at investing. And at the same time, I didn't pass my exams, which made my parents very disappointed. So I decided to continue for one more year at school. And the following year, I took it seriously for maybe 3 weeks. And then I started reading the Buffett partnership letters and everything that has to do with Warren Buffett. A funny story during my second year was that there was a lecturer of statistics, and he told us to make a project on how statistics can be implemented in other areas to be beneficial. And I decided to be a bit of a rebel, and I was like, all right, I know what I'm gonna do. I'm gonna get the efficient market hypothesis, and I'm gonna prove it wrongly. And I put it there in my presentation. I showed Warren Buffett's track record. I showed the 52-week highs and lows of stocks. I showed all the track records of the best value investing legends. And all the students loved the presentation, but my lecturer hated it. And he failed me on that project. Fast forward a few months after that, I started looking at individual companies, and I stumbled upon Monish Pabrai's podcast. And I heard him say that he bought a company at 3 to 5% of liquidation value. And when he said that, I was like, all right, if he thinks it's worth 20 times more than it is right now, then it's definitely good for me. So I went to find out which one that was, and I figured out it was Reysas Logistics. And the first thing I did was I went to see their financials. And even though Reysas, looking back, looks like an obvious investment, when I looked at it the first time, it looked nothing like an obvious investment. So the reality in the financials at the time was that Reysas was at book value, and its earnings were negative. And I was like, what is going
So,
on?
yeah, yeah. Anything is fine. I'll show you this time.
Yeah, and I was like, what's going on here? So it's at book value, negative earnings, and Monish Fabra is saying it's worth 20 times more. So I started searching why it could be that the book value was so low. And my understanding after searching was that the Turkish accounting standards used to allow for cost accounting for the property values. But the problem was that they used to also allow companies to not adjust to Turkish lira inflation. And that meant that if a property was bought in 2010 and it's still held in 2020, the value still kept the same on the books, but the real value is at least as much as the adjusted inflation number, which would be 10 times more than the price they bought it. So after I looked at all the properties and adjusted for that number, my valuation was around $1 billion. So that was the value of the properties. But then again, the earnings were negative, which to me didn't make sense. So I looked into the income statement and I saw that their operating income was around 20 million. And all that 20 million was being washed away from two things. And one of them was the interest expenses on their debts. And one of them was the currency losses from the rents. And the first question that came into my head was that if the value of the property is 1 billion, if I'm correct on that assessment, then how is operating income only 2% of the real value per year? There has to be something else here. And after some time searching, the conclusion I found was that in 2018, there were Turkish regulations put in place that forced Turkish companies to pay rents in Turkish lira. And of course, international tenants could pay in euro or dollar. But Reysas still had quite a lot of tenants that were Turkish. But then it still didn't answer the question because I knew that Reysas had inflation hedged rents. And what happened was that the inflation hedge was being done based on the Turkish statistics. And the Turkish statistics were actually incorrect, or they were understating the real inflation. So where real inflation was 80% in a year, the statistics said it was around 50. And over 1 year, it actually doesn't make much of a difference. But if you place it and see it over multiple years, then you can realize why the earnings were so low. Then another question I had was, why are the debt payments so high? And when I looked at it, it actually wasn't high at all. So they had 160 million of debts in US dollars. The debt wasn't in US dollar, it was in Turkish lira, but the value was around 160 million. And they were paying around 16 million of interest payments, which is around 10%. And to be fair, after I saw that, I realized that them taking on debt was actually a good thing because since inflation was sky high, the return on that debt was extremely high because the inflation would be 50% and they would pay 10% on their interest payments. So that wasn't a problem for me. But then the currency losses were also a problem. And I realized that over time, the amount of tenants they had that would pay in euro or dollar were going up. And also that Reysas is likely to change a few of their policies to make it more suitable for them to have less losses on their currencies. But then again, if the operating income would grow as much as I thought it would grow, it wouldn't be much of a of a problem either. So after looking at those things, my best guess for their cash flows were around 50 million a year, $50 million. And the stock at the time, the market cap was at 80 million. So the only questions I had left were about the management team. One of them was how much I can trust them, and the other one was how good they are at reinvesting their capital. And for the trust, I searched about them and couldn't find anything myself. Monish Pabrai had previously said they were excellent. And what I could see for the reinvesting um, ideas were that I could see filings where they would buy land and build warehouses, and the total deal after a year would be around a 30% return per year for multiple years. And I could see this on multiple occasions. So after seeing the full picture and realizing, all right, Reysas is on paper expensive, it doesn't screen well, but at the same time, the property is worth 10 times more than the market cap. It's at 2 times normalized earnings or less. The management team is reinvesting capital at 25-30% returns. I couldn't find anything wrong with the company. Monish Pabrai loves the management team. So I decided to go basically all in from my net worth. And at the time, I didn't have much money because I was still at school. And funnily enough, when I was at school after seeing Reysas, I started calculating my opportunity cost. And the way I calculated it was I thought Reysas was worth 10 times as much. And I thought that this gap would be closed in 5 years. So I imagined, let's say, if I had to save $20,000 in 1 year, in 5 years, that would be worth $200,000. And if I could compound just that 10% a year for the next 50 years, that would be another 100x. So that would turn my 20,000 into 1,000x, which would be 20 million. And that would be from just 1 year of working. And if I had to look at the second year, that would be nearly 20 million again. So at that point, I felt so much pain in staying at university that I started applying for finance jobs. And soon after, I started working at a proprietary technology firm that specializes in algorithms for trading. 8 months later, I got fired from that job because of a company restructuring. And it was actually at a really tough place or an unfortunate place because my father was just about to sell a property and I was going to buy it from him. And the reason was that it was a very strange property and not many buyers were available at the time. And my guess was that the property would take more than a year to sell. And by that time, Reysas might not be at the market cap it is at. So I decided to buy it from him by taking a 2.65% interest loan for 40 years. And unfortunately, a few months before that contract, I lost the job. So I applied for more jobs, and I got another job with JP Morgan in July of 2023. And after 4 months, I got fired again. And that was a mistake from their application, but they had to fire me. And then again, it was right before I was going to do the contract with my dad. And then I applied again and found another job. And by the time I did the contract with my dad, the market cap of Reysas went from 80 million to 700 million. So the opportunity was mostly done. But the money we got from there was invested in other companies. And now we're in a more normal state of affairs. I invest my money, I invest my family's money, and I spend a lot of time researching microcaps. And that's basically the story of the last 4 or 5 years of my life.
All right, perfect. Thank you so much for sharing that. We can move on to the Q&A now. If anyone has a question, just feel free to raise your hand or put it in the chat and we can go ahead. Well, before others ask their questions, I wanted to ask, a lot of us are applying to finance jobs as well, and we keep facing rejections from companies because it's very tough. How did you deal with those rejections and how do you continue working hard and stay focused on the long run outcome?
So what's interesting is that since I didn't finish my course. I didn't have much to put on my resume, right? So what I did was partly why I started the website was to fill my resume with s- the things I did during the during my investing. So the website actually helped a lot. And I think without the website, I wouldn't have gotten probably any of those jobs. So that helped a lot. One other thing that helped was that I joined the Value Investors Club in 2022, and I pasted the hyperlinks on the resume for them to see how hard it was to get into. And that helped a lot as well. I think without those two things, I wouldn't have gotten any of those jobs. Now in Malta, there aren't many funds, and out of the few funds there aren't many good funds or good jobs you can get. So I was lucky that the few that were available, I managed to apply for in time. And I guess there was some luck involved. But since I didn't feel like I had much to show for, I had to create different ways to show the skills I can have, which are through the website and through the Value Investors Club.
Okay, there's a question in the chat. Having looked at Bilbel Capital reports, it appears that most of the return of the fund comes from the Turkish stock exchange. How is the performance of your fund compared to the index of that exchange?
I don't look at that exchange index. I think it's done quite well over the past few years. I think it's averaged, maybe since I started investing, it's averaged like 25% returns a year till now, the Turkish stock exchange, or the Turkish Borsa, the Borsa 30. So it's done quite well since I started investing there. Um, I think I'm not sure about the returns though, but I think they were in the high teens or 20s, something like that.
Okay, one more question from my side. For us at university right now, how do you think we should start, actually looking at stocks, and what's the best recommended advice in terms of learning resources and actually looking at businesses? How do you get started? Like, there's so much to know about a company. So how do you suggest you make the process easier for us so we can access ideas?
Okay, so I would say there are two things you have to do, or two things I did that work. One of them is get a ticker subscription, ticker terminal. I really like it myself. And what I do is I just filter 100 million market cap or less in any exchange you feel comfortable in. And I looked one A to Z through all of them, and I just try to find the smallest, cheapest, and best company there is. And basically, what that looks like is a company very low on PE. Most of these companies are actually bad companies, so they're companies that are going bankrupt. But one in every 500 or 1,000 might be a gem. And what I try to do is I try to find companies at a very low PE and then see which of those companies I can reasonably predict their earnings in the future. Um, what I can say is that the amount of companies I looked at, the higher my hurdle rate became. Because in the beginning, I would see a company at, say, 8 times earnings, growing 15% a year. And I would say that's a great investment. And then I would look further and I would find a company at 6 times earnings, then at five, at four, at three, then at 2 times earnings, eventually at 2 times earnings and the negative enterprise value. So they would have more cash than the market cap and debt. And you can literally keep filtering until you find the cheapest stocks there are. And out of them, you will find a few that have sustainable earnings. And the second thing that really helped me was Twitter. So if you have a Twitter account, I would just start writing my ideas, writing the stocks I find, and eventually you'll find people who are just on your journey and they will share ideas with you. So the reality is that in my portfolio, I only have like 7 stocks or 8, and out of all of them, I only found two from that came from me. So having a strong network of investors that are much better than you, hopefully, can help a lot. So those two things are probably the top two for me.
Just one more question related to this. How do you build enough conviction while looking at these ideas to actually press the button and buy? Because a lot of time it feels like this idea is too good to be true. Like, what am I seeing differently than other investors? How do you overcome that fear when you start?
It's hard. Over time, the more you research, the more you'll start to trust your own analysis. But I understand that, especially for me in the beginning, even though I would make all the calculations, everything looks fine, but there's still the hesitation or the friction before buying. So what you can do, I guess, is you can find an investor better than you, who hopefully has much more money than you, and you can share your idea with him, and he can maybe find some things that you're not seeing yourself. Um, but the alternative is to research it so much that you've went through every link on the internet or every important link on the internet and found that there was nothing wrong with the company. And then if something bad happens from there, then so be it. But it eventually you do have to make your own decisions. And I know it's painful because it was painful for me, and it is still painful in certain ways, but you have to pull the trigger someday.
Okay. And once you invest, how closely do you monitor the companies, and are there any certain red flags you look for when deciding to exit a stock, or what's something that would prevent you from digging deeper in the research process?
So for digging deeper, it depends on how I got the idea. So if it's through a screener, I would be very harsh. So if I see something I don't like, I just throw it away. And the reason is that I'm just looking at hundreds of companies a day. But if a friend of mine who's a great investor sends me an idea he has, then I would research it even if I think it's a bad idea, because it's likely that he's seeing something I'm not. And in that case, it's worth it to at least research it. What was the other part of the question?
Are there any red flags you look out for?
Red flags, I mean, they depend on the type of company, but in general, you either see that certain numbers that you think were important are changing in the wrong direction, or maybe certain changes in the board, certain cells or drastic cells from the CEO or something like that. Court cases, lawsuits, the way they pan out. But it highly depends on the company. Yeah.
Okay. Another question is, do you focus on microcaps because you find it impossible to find decent margins of safety in larger companies? Or do you think opportunities are still out there, even in larger stocks?
I think opportunities are everywhere, but if you have a small enough sum that you can invest in microcaps like me, it's you can get the greatest returns you can get from microcaps. I see companies at two times earnings that are good companies, and if I had to look at very large caps at two times earnings, I don't think there even is one. And out of the one, if they had to be there, none of them would be good businesses. So there are opportunities everywhere, but the greatest returns are found in microcaps in general.
Just another follow-up on these opportunities. Do you think the value to be captured from such opportunities has increased over time, or is it decreasing? And why do these opportunities even exist in the first place? I mean, shouldn't other investors look at it and price the stock higher?
Very valid question. Um, I think over time, opportunities increase, they don't decrease. Now, many people think that I mean, they say Warren Buffett had his life easy because all the companies were at two or three times earnings. But the reality was that Warren Buffett went through the Moody's manual twice, one by one, and found maybe five investments that he liked. So it's not very different from the opportunities that we have today. Now, the thing is that the greatest opportunities are found where usually no one is looking. So the thing is that no one will really tell you about the opportunities themselves. So you'd have to find them on your own. But I can say for a fact that I am finding personally very cheap microcaps, and investors that are much better than me, that are my friends, are also finding very good investments. And since the opportunity set has increased and information has increased, I think you can get an edge just the same, or even better by now.
Hi, Gabriel. I have some additional questions from some other students. One of them that I really liked was the investment in UV technologies, specifically IntelliGo, seems extremely complicated. Where did you gain your expertise and circle of competence in that field?
The circuit of competence, I feel like it's a very important thing to understand, but at the same time, people tend to not see it accurately. So, a circle of competence is very important when you're investing, but it's not very important when you're researching. So, I research many companies that I don't understand. And of course, I don't invest until I understand it. But I wouldn't just throw away an investment because I don't understand how it works. So the way Intellego worked was that there was a friend of mine who was a great investor. He shared it with me, and at the time I had no idea. And it took months to understand the way Intellego worked and that industry. And until I felt like I understood it enough such that the risk was low, I didn't invest. But I researched it without the expectation of investing in it in the first place.
Thank you. There was one more question as well, uh, quite a skeptical question actually. It said, I think the performance of the BIST 100 has been around 700% over the last 5 years. How do your returns look in real values considering the Turkish lira inflation rate?
Yeah, so the returns are in euro actually. So the 756% is calculated in euro, not in Turkish lira. In Turkish lira, I don't know how much it is, but the return in Turkish lira for me is not that important because my money is in euro. So all the returns are measured in euro.
Perfect.
Okay, and
If you
just
don't
one
mind,
question on,
yeah,
oh, sorry,
go
on
ahead.
risk. There was a time when Reysas was your only holding. How do you think about volatility and what's your thought on the fundamentals of finance that were taught in school?
Hmm. Well, at the time I was 100% invested in Reysas. It was my whole net worth, but it wasn't as large as, I mean, risk is a hard thing to look at because it varies out by the individual. So the way I see risk is that it's an input-output function, and the outputs are both the probability of losing money and the magnitude of that loss. And the inputs, at least the most important inputs, are the real value of the business versus the price, time, which is why I think volatility is not a good measure of risk if you have a long time horizon, and your perception of the value of the business. So when looking at Reysas, even though it was my only position, I only put 100% of my net worth or 100% of the fund's worth because I figured that the probabilities were so low that that is what made sense. So the way I saw the probabilities of losing money was that I thought it was worth 10 times as much, and therefore the risk was related to the probability of the value of the properties going down by more than 90%. And the only two ways I could find that that could happen was a big war or a nuclear war in which Turkey is bombed, and or earthquakes. And when I looked at the earthquake situation, even though the warehouses of Reysas are in not the best locations for earthquakes, the engineering they have is of higher caliber than most properties. And even if all the properties had to demolish, the value of the land I thought was worth also around half the total value. So that would still be a 5x from the price I bought it. Now you might also say that if the earthquakes come and all the properties vanish, then the value of the land would go down, which is right. But I don't think it would go down by another 80% from there. So I felt like the margin of safety was so large that at the entry point I was at, which was around 90 million market cap, the risk was low enough to make sense.
Very interesting. If you don't mind, I have a few more questions from some other students. One of them is, how did you manage to convince your parents to launch a fund right after graduation?
The good question. So in the beginning, my parents were very skeptical, like probably most parents would be. But I felt like the only way I could convince them would be for them to actually learn how things work themselves, not just through me telling them I'm doing well. Um, so what I would do is for lunch or dinner, I would go there every day and give them three stories or a few stories about how Warren Buffett made an investment when he was 26. He found a company like, well, I don't know, Dempster Mill or anyway, these small micro caps. He bought these companies at three times earnings, one-fifth of book value, so that the earnings were sustainable, so that the management was good, and he made a 3x on that, for example. And I would give them these examples every day. And soon enough, they got interested in learning more about it, and I kept giving them more and more stories. And after maybe 3 or 4 months of me bombarding them with more stories, they kind of felt comfortable in investing with a similar rational um with a similar rational idea to what the stories I gave them were.
Okay, there's one more question in the chat. Do you work solo or with a team? And if you have a team, how many people are involved with Bilbel?
I work mostly solo. My cousin has invested in November 2023, and he's been helping me a bit with understanding or due diligence on management teams. So he would see their past and what they did, and or maybe go through court cases and these things. But most of the research is done only by me.
Okay, and on the research, so there's another question. Thanks, Gabriel. Honestly, your storytelling is on point. That was really engaging. For Intelligo, how much did you know? So much, how do you know so much specialist knowledge about the firm? And what was your source of knowledge? Did you go through podcasts, 10Ks, 10Qs, or did you speak to any experts on the industry?
The answer would be all of the above, um, which sounds overwhelming, but if you just do something every day, then over 4 months you would have gone through pretty much. You would have gone through a lot of things. Um, so I would start with what I feel like the most important information is, and the most tangible or the most reliable. So I would start with the numbers and then walk my way backwards to more and more s- soft ideas like talking to management or customers, competitors, and these things. But I start with the numbers and then go backwards from there.
Okay, and as an individual investor, how do you get access to such experts? And I also wanted to ask, do you think speaking to management teams is important and adds a lot of conviction to the process?
I think it depends. Most of the time, I felt like talking to management was not very important, but that can change based on the investment and based on how much you think management will, or based on how much you think management is important in your thesis. So if you think the management did a great or is executing very well, and you think they will keep executing well, talking to management might help, but it won't be as valuable as if there's a transition in management and the company has transformed into a different type of company. In that case, it would be much more valuable to talk to management. But I would never talk to management before I look at the numbers, because then the way you see the numbers is through the filter of what the management told you, which might be correct, but it might not be.
And what about experts? How do you get access to them?
That's hard because most experts don't reply to me. Uh, but if you message enough, you might get one, um, or a few. So it's a kind of a numbers game. Try to be as friendly as possible, but you'll still get rejected all the time.
I have one more question. So I know you talked about the books that you enjoyed reading at the start of your, I guess, investing career. Do you have any other book recommendations or sources of knowledge that you think were the most beneficial?
To be fair, I feel like I didn't get much return on the books I read. So the Intelligent Investor and Security Analysis were too hard for me when I started. The Little Book That Beats the Market is a book I really liked by Joel Greenblatt. It's really simple. He actually made it for his kids, but I really liked it. The Dando Investor I liked a lot of Monish Pabrai. But then I feel like articles or blog posts I felt were more valuable to me than books. So after a few books, I felt like the return you get on the knowledge you already have starts diminishing quite a lot.
Okay, I also read on your website that you're trying to reach out to more investors now. So I wanted to ask, what are some of the biggest challenges you face while pitching Bilbel to other investors, and how much of an AUM do you think you can scale this strategy to? Because obviously, once you get bigger, it's harder to deploy more capital into such lucrative ideas. So just wanted to hear your thoughts on that.
Yeah, it's quite hard, especially if you only have a 3-year track record. And well, the short answer is it's hard, and the long answer is it's hard as well. Um, I am looking to raise funds from other investors, but it's not the main priority. So if I take it to the logical extreme, if I keep doing well with my own capital, then eventually, after 5 or 10 years, if I keep doing well, of course, then it would be very easy to, or much easier to raise money than now.
Does anyone have any more questions?
I think I've submitted or asked most of the questions asked on the Google Sheets. Anyone else?
Just one more for me. Like whenever you're buying into a small cap stock, there's always someone else selling on the other side. Why do you think they're selling, and how do you sort of piece together whether they know more than you or not?
Well, it depends on how much conviction you have going in. Um, Sometimes they're right, sometimes they're wrong, but in general, with microcaps, there can be many inefficiencies, and one of them is the company has been doing well, but the stock hasn't gone up in 10 years. The shareholders are fed up, and they're gonna sell. And that is the perfect setup for you to buy. Um, Now, since when you're buying, you're kind of the noob, and the shareholder is supposedly knows more than you, then I would have a higher demand on valuation in the beginning. So whenever I go into a stock, the starting valuation has to be lower than a stock I've been knowing for years or a stock I have been a shareholder for a long time.
Okay, got it. I think there's no more questions, but thank you so much, Gabriel. We really enjoyed the session and learned a lot, and are excited to continue our investment journey. I'm sure a lot of members have gained a lot of confidence and learned about your unique strategy and would pursue similar stuff. And yeah, very excited to be in touch and learn more from you. Thank you so much.
Thank you, Tejas. I appreciate it very much. If you want to message me over anything, you can message me on Twitter or on LinkedIn. On Twitter, I am at Samut Gabi. So Samut is my surname and Gabi, Gabi. And I hope these 45 minutes were worth your time. Thank you very much.